Bitcoin's weekly chart is looking incredibly bearish, with a gravestone doji candle printing, signifying a shift in bearish strength and possible continuation toward the downside. Will we see more downside, or are the bulls able to reclaim strength? Let's go ahead and dive into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having an excellent day today. In today's video, we're going to be discussing the looming threat of the weekly candle printing as a gravestone doji. What this means for the price action, what this could potentially tell us for the future price action, and how the short-term price action and the macro price action is looking from a technical and a structural perspective. Before we do get into it, smash our like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin, and of course the relevant economic data. If you are interested in joining our VIP channel, we post trading signals with exact entries, exact targets, exact stop losses, such as this trade over here. Entries, targets, stop losses, justification, and trade charts are provided. You'll also get access to 5 chats: our general chat, our trading chart and education chat, our help chat, our news chat, our daily video chat, and of course our additional trade setup chat. If you're interested in joining all of that, contact me in the pinned comment in the free channel to find out more information and the entire trading track record. Without further ado guys, let's dive into the video, starting on the market data. Very interesting stuff guys. We are coming very close to the end of September, about 7 days out now. September is still currently 2.46% in the green. However, that may change over the coming week, considering that Bitcoin is potentially printing a gravestone doji candle. This of course has 1 day and 1 hour until close, and of course a gravestone doji signifies a significant amount in selling pressure within the point of this period, within this weekly period. And of course we've seen gravestone dojis on the Bitcoin chart before. The most notable one, or the most recent one, was all the way back over here. This was in July, just a few months ago. We saw a gravestone doji print, again signifying a wick into resistance, okay, a strong bearish reaction from that resistance, and then a continuation downwards. We have seen a very similar thing over here guys. We've seen a gravestone doji potentially print. That wick moved up into resistance, okay. We've seen a strong bearish reaction from there, which will potentially lead to a continuation downwards. We're discussing that in a little bit more detail in just a moment. Moving on from there, market data, looking at volume. Volume is actually ridiculously low right now, 22 billion. We're down 40% in the 24-hour period. Liquidations sitting even lower at 14 million, down a whole whopping 45% in 24 hours. Looking at the recent price action, it really doesn't surprise me, and it probably shouldn't surprise you, that volatility, volume, and liquidations are so low, because Bitcoin quite literally has been moving within a 0.5, okay, to 0.3% range over the last day and a half. This entire weekend, we have seen almost no volatility and almost no movement whatsoever. Moving over to that volatility index, we can see on the 30-day, on the 60-day, sorry, we're still pushing sideways, and of course on that 30-day period, we're still pushing sideways. Moving over to liquidations, we can see of that 14 million, very evenly split down the middle, longs and shorts being quite equally liquidated. Again, that is indicative of a sideways market, consolidation and compression. So moving over to the DXY had a good end to the week, actually closing out green, pushing into this area of resistance. It's going to be a very interesting week for the DXY. We may see a little spike upwards over here, maybe to retest 106.5, but again, while we remain in this structure, if we do ever at any point lose this black diagonal trend line, which represents the uptrending trend line of this structure or the recent price action since the start or since mid-July, we will see a short-term correction. Again, the measured move of this correction will be the distance between the lower line to the upper line, so we don't have a large move. That could potentially take us downwards to around 103.5, that support level if a breakdown occurs. Again, if we do continue upwards here through this level of resistance, we can actually see a large uptrend start for the DXY. If we do see this uptrend start for DXY, on the macro scale, right, we're on a macro uptrend above this red blocks, we will see the markets correct more aggressively. And by the looks of things, the S&P 500 and the Dow Jones are not looking particularly strong right here. Taking a look at the S&P 500, this high time frame rising channel formation. Again, I've been saying for weeks, if we see a breakdown of this confluence point between the POC peak over here, okay, the VRPV, sorry, peak over here, the horizontal support represented by our resistance points back in 2022, and of course the confluence point being that uptrending diagonal trend line represented by this black trend line. If we lose that area of confluence or support, we could potentially see a pullback as low as around 4,100 and even lower if we lose that POC level. So again, the markets are actually moving into quite a delicate position moving into October. The same goes for the Dow Jones. We've actually officially lost that uptrending support line that we've been in since October 2022. We have lost nearly a 12-month long uptrend. We have broken below it, we've closed a daily candle below it, and we may even close that weekly candle below it. We can see we are moving into a decent chunk of support over here, but if we start losing these lows at around 33,000, we will see a large correction toward the downside. Again, a lot needs to happen between that, but again, if the DXY starts going up even further, these are real risks we do have to be aware of. And the same goes for Bitcoin. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Guys, we'll go ahead and get into Bitcoin now. Bitcoin is also in actually a really delicate position. If you zoom out and take a look at the high time frame of this chart, we can see we are sitting just above a major bullish support. And if that level is lost, we're going to be entering a macro bearish trend. If we really go ahead and take a look at what's happening over here, we saw a whole heap of sideways consolidation all the way back in late 2022, early 2023, okay? This sideways consolidation developed up around this neckline of resistance. We broke through that neckline of resistance, resulting in us entering a weekly bullish trend, and we have been consolidating in this cluster of price action above 25.2 to 24.4 since March 2023. We're looking around 6, nearly 7 months. Okay, so if we do lose this low at 24.4, we will be losing a 6 to 7 month long support level, and that will trigger a loss of this weekly bullish structure, meaning we will enter a macro bearish downtrend, just as the DXY would enter a macro bullish uptrend if we break above this respective resistance. So the markets are actually in quite a delicate position. So first and foremost, let's talk about that weekly candle and then bring it back and do a structural and technical analysis on daily and then the short-term charts. So moving back to the weekly candle. The weekly candle has 23 hours and 55 minutes remaining until it actually ends up closing. Now, the weekly candle is quite significant for more than one reason. And that is not only because of the structure of the weekly candle, but of course, where the price action is currently sitting at the time of the weekly candle closing. So let's talk about the structure of the weekly candle first, and then get into the other aspect of the weekly close. The weekly candle is printing a potential gravestone doji candle. Now, a gravestone doji candle is a candle where we have a very, very large wick toward the upside, okay? A small wick toward the downside, and a very small body. We have a very small body candle between the opening and closing price. What this candle actually tells us is during the 7-day period, or during the period of which we are viewing the candle in, we saw a massive surge in strength upwards, okay, met with a equally, if not larger, negative reaction. Okay, this is signifying that where the price pushed into, we saw a significant shift in strength, which has developed into a downtrend, a short-term downtrend. That downtrend has the potential to actually result in a higher time frame continuation in the direction it broke towards. So if we're seeing this gravestone doji print, okay, we could potentially see a continuation downwards, as we have seen in the past. Let's show you a gravestone doji. Prime example of one, like I said at the start of the video, was back over here. We saw a perfect gravestone doji print, and was resulted in this continuation downwards. Now, I'm sure in your own time, you can go back and look at the charts and find out the gravestone dojis. Again, they do not have a 100% success rate. What they also don't tell us is how far the price action can do. All it is telling us right now is the difference between buyers and sellers, or the actions of buyers and sellers, and the shifting strength within this singular 7-day period. How we apply significance is by applying context. So first and foremost, if we take a look at the higher time frame, we know that gravestone doji top was printed at this level. Now, we also know we are in a weekly downtrend if we fail to break out of this downtrending diagonal resistance, meaning we are currently in a weekly downtrend. So what we saw was a bounce from our major bullish support, okay, to retest these areas of confluence closing up on that level of resistance, which is going to be 28K, as well as a downward diagonal resistance reflecting the weekly downtrend, a failure to currently break out, resulting in a shift in strength downwards, resulting in the price action on this smaller time frame, breaking back into the horizontal consolidation, signifying weakness as well as signifying a downtrend developing on the small time frame, which potentially could develop into a higher time frame downtrend. Moving over back to this chart, if we bring up some indicators, we can see with that doji candle, we saw a rejection of the bull market support band, right? We saw a rejection here. We came down, we retested this 25.2 to 24.4K level. We came up, rejected once more. So we've seen another rejection. Again, while we remain under the bull market support band, we have relative weakness, okay? This is relative weakness in comparison to price action above the bull market support band, reflecting again bears have overall control of this price action. Moving to another extent, we saw again the Gaussian channel. A failure to break out of that weekly downtrend will result in a failure to break through the upper band of the Gaussian channel, which again signifies weekly weakness and of course the fact that we are in a downtrend. And moving on from there one more time, looking at momentum, we can see, guys, we have negative momentum here as the momentum histogram on the market side B is underneath the 0 point. We are underneath 0. While we remain underneath 0, we are positive here, we are negative here. We can see the blue wave is under 0, therefore we are negative. If we take a look at the RSI, drawing our lines through over here, we can see the RSI is currently underneath this trend line, again reflecting that we do have a negative momentum. So nothing we are seeing on the chart right now from a technical weekly perspective is signifying we have strength. In fact, almost everything, as we've been saying, has signified, all we have seen is a bullish reaction on the short term from a very, very important support, which is completely expected. That bullish reaction has failed as of right now to break through any significant high time frame levels, and thus the current weekly downtrend should be considered remaining intact. And that is the current situation, guys. So how can the bulls really take control? Well, the first main step is to break through this weekly downtrend. And now we do have some possible warning signs over here. What we can see, or what we look for when we break out of trends, is we look for two things. Besides the price action breaking through a trend, we look for volume and we look for momentum. We look for strength. Okay, we're not just looking at the price action. Price action can be deceptive. Okay, we want to know, does the price action have the relative strength behind it to actually validate this breakout and push the price higher, or is this price breakout nothing more than deviation? And that deviation can be from a price action perspective, but we can also see deviation from a technical perspective, right? If we see price action break through, we do not have validation from momentum or volume, that is generally deviation. If we see momentum break through that respective downtrend, but we do not have confirmation from our volume, okay, or our price action, that could be considered an overextension, or the fact that we are likely to see momentum reverse and exhaust prior to the fact that price action will break through. Again, if momentum continues downwards prior to the price action breaking upwards, that could be considered weakness and result in a continuation downward in price. So again, things you have to consider. For the sake of it, guys, we'll zoom out a little bit more and talk about this. If we do see a breakdown of 24.4, okay, to 25.2, the obvious target is going to be that this measured move from the head and shoulder pattern will continue. Again, ever since the 28.4 breakdown, we've seen that measured move play out, okay? The measured move is actually targeting the 19.2k level. This is where the measured move is targeting. We have seen a little bit of that measured move play out, but again, if we remain underneath this weekly trend, this measured move is still very possible. If we lose 24.4, that is when we expect the price action to fully correct. If we break above this weekly bearish trend, okay, we break above this weekly bearish diagonal trend, the measured move becomes invalid, okay? It becomes invalid as this short-term structure then takes precedent over the most recent structure. Keep that in mind, guys. Do not be overly bearish, okay? Because we haven't broken this trigger point, but you shouldn't be overly bullish here either. You should be very much neutral. Let's dive into the short term and then summarize and wrap up the video. So again, short-term price action is boring. It is bloody boring, but at least on the short term, we can see one thing, and that is we saw an overextension toward the top side. We saw a failure to break higher as we saw this bearish divergence print. Again, a bearish divergence over here. We saw a correction. The correction took us underneath the upper level of resistance of the horizontal consolidation. Therefore, while we remain below, very simply, this level of resistance at 26.8k, we are actually in a short-term downtrend, right? So while we remain below 26.8k, we are in a short-term downtrend. That short-term downtrend is still going to target this lower block of support around 26.3 to 26.2. This is going to be support. If we lose that support, that is when we look for a continuation to retest the lower range of this channel. If we break the lower range of a channel, we're very likely to continue through that last support as we've already retested that area. And as we retest this area, this support has now become a little bit weaker. So short term, bearish, bullish, back above 26.8k. Okay, let's dive into the even smaller time frame and try to take a look at what we are seeing. So right now, what are we really seeing on the chart? And again, like I said, guys, the price action is so stagnant that it makes it really tricky to be certain about anything. So the best thing to do in these times is to identify trigger points from volume, from our VIPV, trigger points and where the price action would like to continue from if broken. So first and foremost, what we can see is we are developing some degree of base of support. So we'll go ahead and draw that one in. We have some degree of a base of support developing around about this level. So we'll go ahead and just change that one to green maybe to reflect support. Perfect. And then, of course, we have some degree of resistance sitting up around this level, right? We have a resistance up over here. We have support up over here. So we are consolidating sideways. We have a very much and a very clear horizontal consolidation. Now, if we take a look at the direction of entry, we saw an entry into this consolidation from a downtrend. Therefore, the direction of which the price enters the consolidation is the more likely direction of which the price will continue if the correction happens toward the downside. Therefore, we should be looking at these upper levels as points to short rather than points to buy if a breakout continues. Validate these before you look for longs. Therefore, these should be considered, any wick above should be considered a fake out and an opportunity to short for a correction, because we have an overall narrative that because the price entered downward, the price will continue downward. And that is the overall narrative for these trends, all right? Until proven otherwise, we should expect that to continue. So, if we do break upwards, again, where will we be proven otherwise? If the price gets above 26.8k, that is when we're going to show relative strength. Until then, we do have a downtrend from this horizontal level. I'm going to go ahead and wrap up the video, guys. I hope you enjoyed. I hope you learned something, and I'll catch you guys in the next one tomorrow. Have a fantastic day. Cheers.